All right. Hello and welcome to How to Become an Informed Investor with Deborah Pratt Johnson Burns, Chief Prosperity Officer, financial educator, and mentor. Literacy to Legacy Mentors, Reframing Your Financial Future, a Pratt Prosperity company. For more than 3 decades, Deborah has built a great reputation as a recognized financial and business mentor to individuals, entrepreneurs, families, and retirees. She has a proven track record as a profitable private investor. She has launched and built profitable 6- and 7-figure companies. She has served as an affluent marketing strategist to 2 of the world's most well-respected wealth management companies, U.S. Trust and Rockefeller and Company. To serve her clients' complex business and personal financial needs, Deborah has built a strategic partner network of trust and estate attorneys, tax strategists, and accountants, the nation's leading college financial aid advisor, and a university ambassador. Her company mission is to educate, inspire, and motivate people to master their financial lives and live prosperously at any age through personal finance, education, and mentoring. So welcome, Deborah.
Thank you so very much for a very wonderful introduction and opening and invitation, for that matter. What Women Want Network is a really fun and exciting group, and I'm delighted that you are kind enough to invite me to today's event. Yes, I actually have 30 years of experience mentoring individuals, families, retirees, and business owners on how to become more prosperous. What that really means is I get into the DNA of a client's background and look at them in such a holistic way that I say, you know, what triggers happen with money since they were little, for instance, or what kind of things are happening in their lives that are influencing their decisions financially. So I'm assuming that most people who are listening today understand the nature of a financial relationship. I'm more of an educator, catalyst, and mentor than I am an advisor. I don't run money for anyone. I don't run portfolios. I only do that for our family. So just to be clear.
Well, that's great to know. Well,
Yes.
We've got some really important questions to go over. So why has investing become so popular over the past 18 months?
You know, I've seen so many people over the past 18 months and longer say to me, I really want to learn how to invest. How do I do this? And, you know, that's a pretty loaded question.
Right,
So
absolutely.
I think what I've seen, and many of us have seen in the financial services industry, is that because of the migration of people out of offices to be working at home, they found themselves, and frankly, so did their companies, to be much more effective time-wise. They really were productivity powerhouses, really, and found themselves to have much more time on their hands than they ever did before. So here is the perfect opportunity to use that time wisely on their personal goals. So when they have a lunch hour, when they have a coffee break, when they have an early afternoon break, whatever it might be, a lot of people were picking up their smartphones and looking at ways in which they could start an online trading platform relationship and get into the trading field and the investing field for the first time. The other thing is that there are trillions of dollars pumped into the economy because of the stimulus efforts.
Right.
So you and I know, and everyone knows, that many of us got stimulus checks, many of us didn't, but you know, I think the majority of people in the United States did. And over 10 million platform investor trading accounts were created during the pandemic. And that's according to the Wall Street Journal. So that's a lot of investors who are really excited to rock and roll, right? So not only that, but in addition to the stimulus money, the extra time, and also stock availability has changed in that many of the online platforms have started offering a thing called stock slices. So let's say a stock is $250 a share and you think that's a little heavy and a little too expensive. They'll send you an opportunity to take a slice or two or three, whichever you prefer, of that $250 company, just in the effort for you to become a shareholder. So that was also very exciting to people. So it's the Wild West and it's a new era. And frankly, I think it's very exciting. So more opportunities to really, I'm here today to teach you how to really become that informed investor and what are the steps that I, over the past 30 years, have taken and continue to take. I have a formula, understandably, and I'm happy to help share that formula with you so that you can learn how to do this too.
Great. Sounds exciting. Yes. What elements comprise a successful investor?
So I think the most important thing here for anything that you're endeavoring on who's listening today is time. Commit the time that's necessary. There are no get-rich-quick schemes. There are no easy roads. This is a study. It is an art and a science. So I think time and dedication is important to do the research that's required. It's not, luck is not an investment strategy. So a lot of young people who got into the market and watched things like Reddit and watched different stock memes go up and down ridiculously, put a lot of their hard-earned money into the market, realizing that they thought, oh, I want to be one of those guys or women. And what happened was they lost all their money, and they really, that's why I said it's the Wild West. You have to be prepared. Like anything you study in life, you have to do all the research and all the work that's necessary to actually do it well, right? Knowledge is power. We know that. The other thing is, it's important to obviously set up an online brokerage account with whichever platform you are comfortable with. Again, not plugging certain companies, but these are the platforms that are available and the most popular ones. Fidelity, Schwab, E-Trade, TD Ameritrade, et cetera, Merrill Edge. And you can actually go online and create those accounts with a minimum deposit, whatever the requirements are. When you get all of that fundamental things done, housekeeping, so to speak, it's important to understand what are your investment goals. Why are you in the market in the first place? Are you 20 and building your fortune? Are you 40 and building your family? Are you 60 and building your legacy? So each of those respective audiences has very, very different goals in mind, but holistically speaking, their goals are, I want to use my disposable income, not my income to pay the rent or the mortgage or for college, my disposable income that I can afford every week, every 2 weeks, every month from my paycheck, from my revenue streams, to invest regularly. So that's important to know. What are your goals? Everybody wants to make money. That's sort of the obvious scenario here. But how much do you want to make? And in what time frame? So this is basically called passive income. Or the guests know that, but I'm just reiterating that for factual purposes. And basically this foray, if you will, into the market allows you to set the tone of what your goals are, your visions, your dreams. Maybe you want to start a business. Maybe you want to have a vacation home. Maybe you want to build a company for someone else. Whatever those goals might be, each respective person needs to do these fundamental things to be able to build those dreams and visions and goals. Okay.
Absolutely.
Yeah. Secondly, once you have the fundamentals down, you would go into, there's a stock app on your phone, whether it be Samsung or iPhone or whatever it might be. There is a stock app. It's built into the phone. And basically, it allows you to make a thing called a watch list. And what I recommend is before you put a dime in the market or a penny, you go in and you create a watch list of all the companies that you're interested in investing in. Because what's important is industries are cyclical, meaning, so for instance, and I'm sure you know this, FANG stocks, FANG stands for Facebook, Apple, Netflix, and Google. They have been the quote unquote darling of the market for a long time. Okay. I can't specify exactly, but they have been. And we've all reaped the benefits of a FANG investment strategy. However, the bellwether is you can't rely on, future results or you can't bank on future results from past performance. It just doesn't work that way. And you have to be able to be flexible. And you have to be non-emotional, which is obviously the hardest thing of all. It's your money and you're seeing it go up and you're seeing it go down. You have to get comfortable with volatility. It's the nature of the game. But I think more importantly is that once you have that fundamental watch list set up, then you can dive into some of the more complex resources that I happen to know professional investors use, not only on Wall Street, but also in some of the foremost wealth management firms in the world, as well as independent wealth management firms and individual investors such as myself, self-directed, we call it. And basically, you can then use that research to, if you will, fill in the blanks. So in other words, build the foundation of the house, if you will, with the watch list. And then get your decorator, get your architects, get your designers, get your kitchen and bath guys in, and then you can really build a spectacular home that is a foundational thing for you that you'll have for a long time. And then it's an investment, of course, as well. So what that means is to segue into some of the resources that I use and that I have used, and they've obviously evolved over time. Not only will you dedicate the time and the watch list and not spend a dime, then you will go in to your resources in the media. I would start there. So most of us as professional traders, if you will, actually read the Wall Street Journal on a daily basis. We read Barron's, we read Kiplinger. Each of these media have been around and they are foremost in the industry. And Entrepreneur has some pretty amazing articles as well. And I'm a business owner and a self-directed entrepreneur. So I own 2 companies. So I also want to know what other entrepreneurs are doing and tips and tricks from them as well. Absolutely. So it's important, so you have your watch list and then you start sort of filling in the blanks. Okay, so what are they really saying about these companies? Are these companies that I feel morally inclined to buy? For instance, some people don't want to involve their money in tech. Some people don't want to get into industrials. Some people don't want to get into oil and gas. Some people don't want to get into other things that they may feel uncomfortable with, like tobacco. Those are just facts. So you decide what makes you sleep at night, right? Right. And once you've done the research and gone in and read the articles, et cetera, then you take a deeper dive. And this is where I think it separates the professionals from the amateurs and the profitable from the unprofitable. Because like anything you do in life, when you get your degrees, whether it be a bachelor's degree or a master's degree or a PhD, those people work very hard to get those credentials, right? And as a self-directed investor and private investor, those credentials are earned through the quality of the research you use, right? So I know, because I have been on the Schwab platform for 40 years. I started investing when I was 10. No, I'm only kidding. It seems like a long time, but it is the truth. And that has evolved over time. Right. And basically, I like the following 4. They are not the absolute be all end all. It's just what's worked for me and frankly, a number of my clients and a number of my colleagues. And they start with Motley Fool. I'm sure you've heard of them. Absolutely. A lot of these, keep in mind, a lot of these resources are complimentary, they're free, but you really don't get the gold nuggets, if you will, until you actually subscribe. And as far as I'm concerned, get serious about this. This is
Right.
not a pastime or a hobby. This is a serious endeavor. So if you really want to make money and potentially live off this money at some point, whether you're 40 or 80, that is potentially possible if you do the right things and take the advice I'm giving you, because it's foolproof. And no pun intended with Motley Fool. So anyway, so they are a great resource. They are very inclined to build financial freedom is really one of my goals as well. You know, empowering people to use the tools, use the tricks, use the strategies to become financially free. And that doesn't matter if you're working at a Fortune 500 or 100 company making $500,000 or $1 million. You know, the wealth is available to you is my point.
Right.
It is your choice whether you want it or not based on your goals, right?
Yep.
So that's one of them. The next three are very, I'd say, professional level, serious resources for those who, like myself, are inclined to use these on a daily, if not sometimes hourly basis, depending on what the markets are doing.
Right.
And those are Seeking Alpha is one of them. The good news is I have duplicated my watch list, which, by the way, changes based on what's going on in world economies. It's not static. It's very fluid.
Right.
And basically, I have a watch list on my iPhone on the stock app, and I have a watch list on Seeking Alpha as well. And here's why. In addition to the not only the stocks you want to buy, but the sectors you want to be involved in, which I alluded to some degree.
Right.
May it be consumables like Nike, consumer goods, oil and gas like Exxon, let's say, or FANG tech, or others for that matter. There's many, 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 or mutual funds for that matter, if that's something you want to do, or index funds. I mean, it's really your prerogative of what you want to get involved in. I'm all about beating the S&P. That's my goal. I treat this sometimes as a contact sport. I'm very aggressive. I'm very serious. I want to do the best I can. I want to, you know, we can't all beat the S&P, but it is a tremendous goal to have. Anyway, so when you get into Seeking Alpha, you can subscribe and you can have an annual subscription, and they give you more goodies. It's like Halloween every day. You get so many wonderful goodies, and they give you charts and graphs, and they give you research and ways in which you can keep track of things. And here's for me one of the bennies of using Seeking Alpha. There are expert traders and investors who are columnists. So I follow probably a half a dozen of those columnists because they're covering companies that I'm interested in. Right. So every day, in addition to my watch list, those stories, I mean, I'm up at 7 reading those stories every morning, right? Right. As if I was on the street, on Wall Street. And, you know, you act as if, because you have to do, imitation is the highest form of flattery. I have to do what other people who are successful are doing, right? Right. So I go into Seeking Alpha, I look at all the stories, I see sort of the sentiment, if you will, of what the market's doing. For instance, this gets a little granular, but bear with me. I watch what the FOMC does. What that means is the Federal Open Market Committee. They determine and set interest rates. And as you know, interest rates have been 0 forever, and that's helped all of us be fabulously happy and fluid. That's about to change. Right. We've also got the current debt ceiling going on, and how are we going to avoid and avert a potential catastrophe, et cetera. So it's important to not only be current with world news, but also, if you will, siloed in the categories and the stocks, and reading about those writers and contributors who are professionals who do this every day, all day long, right? They're entrenched. Those guys are like, excuse the expression, but I was running agencies for most of my life, PR agency divisions of ad agencies. I mean, I have teams of people working for me. I can't possibly be doing all that. And frankly, nor did I want to. So I relied on my team, and particularly my deputy, to, you know, my second in command here, to actually do all that stuff for me. Like, can you be my eyes and ears? Well, I'm my own captain of my own ship here. So I'm doing that myself now. And I prefer to do it myself because there are nuances as an investor that you may want to see that the person that's maybe working for you doesn't really know about. So I think it's important, you know, stick to your guns, do your own research, and go from there. The next one, sorry, one other little tip. And maybe you are familiar with this, maybe you're not. when the market opens at 9:30 every day, world market as in NYSE and New York Stock Exchange and the Dow, if you will, and NASDAQ, and they close at 4, okay?
Mhm.
But keep in mind, because of the global time changes and other countries and how that rolls across the country and across the world, all the other markets are still open. So Nikkei in Japan is open, to give you an example. What that means is that even though your company trading is ended at 4, it never ends at 4. It's 24/7, even though we're only legally allowed to trade from 9 to 5.
Right.
9:30 to 4, excuse me.
Right.
So what that means is I'm a big believer, my husband and I are both traders, so we both do research, and he does different research and I do different research, and we just have an absolute ball. And I'm grateful to have the luxury to do that. But the point is, we watch the futures. What that means is that the futures determine what's going to happen in the market the next day. So as an example, before I get into the other resources, we are heavily into the market right now in the oil and gas sector, because we have done our homework and noticed that, and my husband in particular, when you're in a particular platform like Schwab, for instance, if you're in the mobile app for Schwab and you scroll down to the bottom, it shows you the most active sectors of the day.
Got it.
And they're in green or red. Red meaning they're not doing so well.
Right.
So that said, when we saw oil and gas begin to really jettison up and just almost become explosive, the next thing is, all right, let's add some of the top companies to our watch list. The obvious ones, which are the most popular ones, are ExxonMobil, what is the other one? Chevron. But there are others, ConocoPhillips, Hess is another one, Marathon Oil, it just goes on and on. But the point is, all of the pundits, if you will, and the experts we read and the columnists we follow, they're high on those particular ones. So I'm going to take their lead. I don't know better than them, so I'm going to take their lead. But I'm still not investing, keep in mind. So I'm watching. Then the next thing is, again, this gets very in-depth. I'm watching on Yahoo Finance, on Reuters, etc., what is going on with OPEC, because OPEC drives everything. So Monday, pricing, barrel development and distribution, etc. So they had agreed in July at 400,000, I may be off, whatever. They had decided on a certain amount of barrels per day production. And okay. All of the oil and gas people in the industry were hoping that they were going to stay with that production, because we were looking at a deficit. And that meant that as you have a deficit of like anything else, if you don't have any inventory, we got a problem and the prices are going to go up, which is good as investors. So I'm watching OPEC on Monday morning, Monday afternoon, watching what I need to do based on their decision. And I'm ready to hit go, 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 buy the minute I hear what the news is. That's how entrenched I am. Okay. So I'm not suggesting you all have to sit there doing this all day long, but I have 2 companies. I run here out of my home and I have the luxury. I'm extremely organized and very dedicated and very deliberate. And, I just hit go, 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 go. And in all due respect to all people who are involved here and what their choices are, I'm also into green energy. But at that particular time, on that particular day, I made like $5,000 in like 4 hours. So my point is, there's a lot of opportunity here, but guess what? I never would have made that if I was not doing all this research and following OPEC and watching the markets and seeing what the futures are doing. It feels like a full-time job, but it's not. Okay. If you're very determined and dedicated and very organized and very specific, you'll do brilliantly. So I want to give those examples because that's how in-depth this can get.
Absolutely.
And people may or may not be interested, but either you're interested in winning or you're not. I mean, and you got to be in it to win it, as far as I'm concerned, right? So you got to do the work. It's just So some people are like, oh, I want some stock tips. I'll get to that later. So the next thing is the next 2 are also very professional level expertise. I happen to like them, and it's one of the first things I plug in when I'm looking at something after I look at Seeking Alpha. And that is a thing which is so cool. And it's called Tip Ranks. What that is you put in the stock symbol at the top, and they tell you, they give you an entire like written chart, not all these graphs and things. They give you a written chart of, these are the hedge funds that are increasing their exposure to the stock. This is a 10 out of 10. We recommend you get in, and this is why. It has analyst recommendation of financial analysts in the industry.
Wow.
And that is invaluable, because you would not have access to analysts otherwise. You just wouldn't.
Yeah, that sounds amazing.
It is amazing, and it's free. And
Yeah.
I subscribe, and we subscribe because we want the juice. We know we want the real nitty gritty, and we want the edge, is really what I'm saying here. The other one, again, when we're thinking about investing, and to recap, putting our chart together, our watch list, I'm doing cross-referencing with every one of these resources. So this resource and this research is extremely intense, meaning I don't buy anything unless they've gone through my paces and they check off every box, because money's money and it's hard to come by sometimes. And it's
absolutely
hard, and we need to respect it, is really what I'm saying. So TipRanks is brilliant, love it. And then Zacks. Now, you may have all heard of Zacks. It's one of the oldest investment research firms. They look on stock research, analysis, and recommendations. So they're a tremendous resource as well, and I love them. The other thing is, whoever your platform company is, they will also give you a chart and graph of all of the specifics of your stock. What is the 52-week high? What is the 52-week low? The old adage here in the industry is buy low, sell high. That is a serious consideration. And sometimes, because the markets are what they are, you might not always be able to pull that off. It's called market timing. So the more entrenched you are in your research, the better off you'll be able. I'm not suggesting that everybody go in market time and day trade. I'm not suggesting that whatsoever, because it's not recommended for those faint of heart. No, it's just, I've done it successfully. It's just not easy to do. So I'm not highly recommending that. But if you've got the goods and you've got the credential and you really know what you're doing, you've got the strength and confidence to weather the storm, if you will, go have at it. And I think, the other things I want to share with people on the call today that are really critical if you're considering investing in the stock market. And I remember in the big agency world, I played with some very big players on Madison Avenue. And I'll never forget going into those meetings. I think you were in marketing and advertising too. So you know the egos, oh my God. And the whole scenario of pitching a piece of business and the preparation. It's like, Downton Abbey, for Christ's sake. Sorry, but it is. It's very prepared and organized, and people are nervous and they're all dressed up and ready to go. One gal who I admired immensely, she was our president at the time, and she said to all of us, I just want you all to know one thing before they walk in the door right now: check your ego. Check your ego at the door. I want no egos in this room at all. We are here to serve the client, and we are here to win this business. Got it?
Right. Yeah.
And I love that advice, because I think, honestly, Christine, the hardest thing about being an investor is the emotional piece. Honestly. And God bless all of those who can be impartial in the industry. They do this for a living. I understand they're running other people's money and they have to make performance and they have to make profit. And I get that. But they're steely, those people. God bless them. I have tremendous admiration for all of them, because there's a lot at stake. I mean, some of them are running billions of dollars, right? But they have the goods. They have what it takes to weather the storm and be steely emotionally. So I'm suggesting that, because I can tell you, I'm not sure if you remember this, this is another oil story, but back in 2015, I have a lot of friends in the industry, and they called me on Friday and said, "Are you okay?" And I said, "I'm not great, but I'm okay." Then they asked me because the market went down 1,000 points that day. That doesn't happen very often. But the more important thing is the oil industry was starting to crack.
Right.
And oil, as you may remember, in 2015 went from $130 a barrel to $30 in a matter of 4 days.
Right.
That's why they're asking me, how are you doing? They also asked me on Sunday night. So I was able, because of the research, et cetera, I got out before the bottom came.
Right.
And again, I'm not suggesting market timing. I'm suggesting just be savvy, be smart, ready to pivot, etc. Another example of that is, as you may have heard, September's the worst investing month in the history of the 100+ year stock market. Okay. It's a fact. So what do you do in that scenario? Well, you look at your holistic goals, whether you're 20, 40, 60, or 80, and determine, am I in? Am I out? Am I going to weather a correction? Am I not? I've been through enough corrections, 2008 in particular, 2001. I've weathered every storm. I have now, because I'm a little older and a little wiser, and I've got some kids in college as you do, I decide, and this is, again, I'm not recommending this, but this is just a strategy of mine. We decided to liquidate right before September 1st. And it was probably the best decision we ever made, because we got to buy when we went back in at the bottom. Because September went to hell in a handbasket. Sorry, but it did. And that's what it does. Right. So we bought real super low. We put a toe in. I didn't put my whole foot in, okay? Because September's volatile. But my point is, I was always a big fan, and has helped my kid go through college for that matter, as an Apple's investor. So, and Apple's been my baby for years. Well, again, check the emotions at the door. I had to get out of Apple. I had to cycle out of a lot of tried and true Microsoft, I cycled out, and we cycled out and pivoted out of a lot of tried and true stuff as stocks, because we knew it's not a good idea to be in this sector right now. Now, today, I happen to know, I watched it today and yesterday, they're coming back slowly but surely. It's not like they're not going to come back, but you have to look at what are your short and long-term needs. As you can imagine, I derive income. I live off the market, so I derive income from this. So I can't afford to make any mistakes. And nobody really can. And you don't want to lose money. Who the heck does? I want to win, win, win every time, all the time. It's nothing new. But in order to have those kind of results, if you will, you got to be sharp as hell, and you got to really be savvy, and you got to pivot, and you got to move, and you got to be aggressive, and you got to go with it, and got to go for it. And no, it's not always going to be perfect.
Right.
Okay. The next thing is, and I know this because I have many, as I said, gentlemen in my life. I've been on boards of directors. I've worked with many men in my industry, as well as in the finance industry, CEOs and things along those lines. And a lot of them were kind enough to give me stock tips just because they're friends. And that's great. And I'll take stock tips from professional traders any day. No problem. But I won't take stock tips from my uncle or my next door neighbor or my whomever, which a lot of people think they should, because they don't have the credential of researching and going through the paces of what we're doing and others like ourselves are doing. So you're putting your hard-earned money in a whim? I don't think so. No. Right. And I can tell you, one of them that I took from a professional investor, from a colleague who's a CEO, I was on his board. That stock, I'm telling you truthfully, went up by 1,660 points.
Wow.
That's a serious chunk of change. We're talking a 6-figure return. Okay?
Absolutely.
So that I'll take. Now, the other thing is, you will have other people who are professionals who may or may not get it right too, keep in mind. So nobody's, as I said, nothing's foolproof, nobody's perfect. You have to trust your instincts, your gut, your comfort level. You have to be really true to yourself. What works for you? So that's why it's important to really trust your instincts and trust your gut, and let the rest of the world go by and take what you can and leave the rest, right?
Right.
I think it's really important. I also have said, as you've obviously seen, be fully engaged in the process. I could not be more serious about that. I think also people really want to make the money, these, excuse me, but it's true. These young kids, these like 20 somethings, they get their Robinhood and they're all watching Reddit and they're watching GameStop and they're like, look at crypto and oh my God, I don't touch crypto with a 10-foot pole, or for that matter, a 50-foot pole. I'm not going in, I'm not doing it, because it's not established enough for me. That is a risky proposition.
Right.
I'm interested in risk when it's calculated.
Right.
I'm not interested otherwise. And look, I'm happy for people who've made a lot of money in crypto. More power to you. Fantastic.
Absolutely.
I'm a believer that whatever works for you, that did not and will not work for me.
Right.
However, I will tell you that the most successful traders and investors buy and hold. Now, I have several friends who are extremely wealthy and they also live off the market and they have gotten inheritances or trust funds, et cetera. And they have been fortunate to get those. And they have managed their money very successfully, whether it be professionally with a company or partially by themselves. And they are in it to win it too, but they're not. I'm more in and out. I've been a buy and hold investor for years. As I said, as I get older, I'm a little bit more open to making that sort of 6-month play versus the year play, if you will. Waiting a year for profits is a long time.
Absolutely.
And sometimes, like for instance, I had an experience and my husband was looking at me like sideways, turning purple, like, really? When I have a conviction or he has a conviction, we respect that because they have their convictions for a reason. And we're very different people. But we both, come together as a great partnership. My point is that I was so Apple gung ho, gung ho, gung ho. I held on for a year and we made a very tidy profit. The thing is, during that year, my husband probably would have had 6 heart attacks because it is so volatile. And what happens is it gets you excited. It'll go up, up, up. And then you're like, oh, good, I'm making money. This is great. And then it'll go down, down, down. And then it will go. It's like being on a seesaw. Farmer Brown let me down. I'm tired of this. And not only that, it actually, I call it, and we call it in the industry, the stock went sideways for months. But I said, Lance, here's the deal. Eye on the prize, sweetheart. Okay, I'm not in the short game. I'm not in it for that. I'm in it for the long game and the long haul because that's how you make the most money. But again, it depends on what are your needs? Do you need immediate needs to pay for college? Do you need immediate needs to pay your second home you're building? I don't know. Whatever it is that you have a goal. And I think, as you can tell, I'm having fun with this and fun with you today. You got to have some fun here. Like, we are not looking at charts and graphs all day long. I mean, that is just boring as sin. I don't recommend it. I recommend, let's have some fun with this. You're going to be part of something bigger. This is terrific. This is exciting. Good for you. Celebrate the little things, the little wins, the little celebrations. Go for it. Have fun. Right. And I think if you're not having fun, you really should not be doing this or doing anything for that matter. No, seriously, I'm all about fun, and in meaningful, respectful ways, of course. Yes. But so I think what's interesting here is if you've learned anything today, you've learned about do the fundamentals, get yourself an online trading platform. I don't know if they have minimums, $100, $1,000, whatever it might be. And I've helped so many people do that. It's so fun. Young kids, middle-aged people, retirees. I'm very instrumental in helping people sort of get in the game. Okay. Right. I'm not stock picking. I'm not chart graphing. I'm not doing any of that for them, but I am open and helpful to people who really want to get in the game and learn about what I know so that they can actually get on their way and be successful themselves. I'm really the prosperity catalyst for them. Right. So the goal is to, again, the charts and the chart watch list, the platform, of course, the research, doing that, putting it through edge cases, et cetera, buy low, sell high, stay in the game as long as you can, if you can, depending on your needs. And seriously, it is a market right now that is requiring an enormous amount of strength, an enormous amount of patience. It's a thing called the volatility index. That index is off the charts. So when you just thought, I don't know about you with kids and you have twins and I have one child, but I'll never forget asking our nanny, Liz, I said, so that was a tough stage. Like, what's next? And she said, oh, then the horrific fours, or something. They're like every single year we would laugh our butts off because it's something else. So we think, for instance, I equate it with child rearing, the market is a little bit like nurturing. You got to nurture your portfolio and nurture your needs and really learn about it and treat it well and love it as best as you can. And then let them also develop on their own and make sure you're in the right sectors at the right time with the right pricing structure so that you don't lose your shirt, and your home and everything else. Because, let's be honest, with the onset of the smartphone apps, it's extremely sexy and it's extremely addictive.
Right.
And that's why you have a lot of young people on what's the other one? Robinhood, my apologies. See, I can't even remember it because I don't like it very much. Because I see what happens, I'm not
absolutely.
It's converting a lot of kids into like lunatics. But unfortunately, a lot of them are also doing well, so more power to them. But people have concerns about the addictive nature of it. So I would just forewarn, that's all.
Right. Yeah.
I don't like to begrudge anyone. So that's what I'm suggesting. I run a company called Literacy to Legacy Mentors, Reframing Your Financial Future. I am an educator. I am a mentor. I have a team of 7 strategic partners, as you alluded to earlier. We help our clients holistically learn about not only spending, saving, investing, life decisions, life changes, planning, retirement, life planning, etc. And I do this with really an eye to sort of a different than most people in the industry. I approach finance in a spiritual way about what are you attracting? What's going on in your life? Why do you feel you need to do this, that, or the other thing? I'm helping people understand what motivates them. And if people understand what motivates them to make decisions, to buy, to sell, to go over here or go over there, I think if I can get into their DNA and we can work on the very fundamentals of how they are as people, we will only together be successful because we really understand ourselves. To thine own self be true, right?
Right.
And I think that's so important, even in the investing space. So I'm offering complimentary consultations. They're 30-minute one-on-ones. We do it by Zoom. We do it by phone. You can sign up on my website, literacytolegacymentors.net.
Perfect.
And I also have a link tree. And I'm delighted to help you navigate the new world and the new era we have going on here and help you become more prosperous, more importantly than ever in your thinking. And in your mindset. That's where it starts, right? That's where it starts. Yeah. And I'm delighted to have this opportunity. Thank you for indulging me. I'm excited and I look forward to helping as many people as I reasonably can because financial literacy is paramount these days. More and more people need the advantage of personal and business finance literacy. I might also add, there is a glossary on my website that tells all of the basic terms. I'm also happy to talk with you about some terms in the industry you may not be familiar with. And I couldn't go into them now because there are dozens of them, but things like PE ratio and dividends and all of those things we didn't get to talk about today, but they're also considerations.
So just say your website one more time for everybody.
Absolutely. www.literacytolegacymentors.net.
Perfect. Thank you so much. This was a wealth of information.
Yes,
so
absolutely.
Really appreciate it. Thank you.
Thank you so much for inviting me and for having me as your guest today. I'm very grateful and honored. And I do hope that many people are excited to learn more. That's it.
Absolutely. Thank you so much. Bye-bye.
Thanks. Bye-bye.